Hello everyone, welcome to Options with Doug, streaming live daily on Bookmap Discord and the Bookmap YouTube channel at 1:30 p.m. Eastern Time. Excuse me. Before I get started, I need to go through the disclosures. General disclosure. All Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure. Trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Here's my contact information. The best way to get in touch with me is through Discord. My name on Discord is Doug P. Also, Bookmap Discord, there's an Options-Doug chat channel. That's a great place to post questions, comments, and content related to the topics of the channel, which I'll go over in just a minute. So Discord, that's the best way to get in touch with me. I'm also on X, formerly known as Twitter. My name there is at Doug Pless. The focus of my presentation today and the focus of the Options-Doug chat channel is options order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning, and I use positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as the directional bias. And the second step of my process is execution, and I look at real-time order flow in Bookmap and real-time market maker hedging flow in Spotgamma Hero to confirm my thesis, and for setups for entries and exits. And when I talk about setups today, I'll be talking about setups in an underlying asset, and those setups can be taken with futures, shares of stock, or options. For example, a setup in the S&P 500 can be taken with ES futures, SPY shares, SPY options, SPX options, or even ES options. Questions and comments are welcome, and I will be watching both the Options-Doug chat channel and Discord, as well as the chat and YouTube for your questions and comments, so please feel free to post. I'll do my best to answer your questions. My agenda for today, what I want to cover, first of all, go over news items, economic data, events and earnings for the week. Then I'll go through my positional analysis. Then I'll review some setups from this morning. And then I'll talk about the live market. And when I get to the live market, if anyone has any stocks they want me to take a look at, please let me know and I'll be glad to do that. All right, let's get started. First of all, with news items. There were a couple of data releases this morning at 9:45 and 10 a.m. Manufacturing PMI data came out. Also, I believe Jerome Powell was speaking at 10 a.m. in some sort of roundtable. And then on Wednesday, Services PMI comes out at 9:45 and 10 a.m. again. And then Friday, the big event for the week is the employment report, non-farm payrolls, at 8:30 a.m. Eastern Time. That's on Friday. All right, let's get started with positional analysis now. I'm going to start with the S&P 500. This is ES Futures and Bookmap, and I did have the same issue today. My computer restarted when I went to lunch. Still have not been able to solve the problem, so everything is up and running, but I did lose MBO data, which is the stops and icebergs, up until when I restarted right around 1:20. So this is the stops and icebergs, both flat. Bookmap does not retain the MBO data used for the stops and icebergs indicators. So anyway, all is well except for the MBO data and this ongoing problem with my computer. Still trying to find a solution. All right, so this is the S&P 500 futures. Before I take a closer look at this chart, I want to take a look at a larger time frame. This is SPX in a 30-day 1-hour chart. And this is showing this downtrend begin at the 9:15 monthly expiration. There was a large expiration, call dominated, and the SPX has traded lower since then. Tried to move up last week and is now back down to around the 42.50 level, just above that level. And that was a call dominated expiration. All right, let's take a look at some levels on this chart. First of all, I've got the lower and upper weekly expected move, shown with the dashed purple lines. Those levels are based on the options market, indicating a 1 standard deviation or 68% chance that SPX should trade within that range for the week. Then the dashed blue lines are showing the lower and upper daily expected move. Again, this is from an options chain, should be available in any trading platform that has an options chain, showing the lower and upper daily expected move. Again, a 1 standard deviation or about 68% chance that SPX should trade within that range for the day. There are also some Spotgamma levels on this chart. These are proprietary Spotgamma levels based on gamma weighted open interest. These are available to Spotgamma subscribers. I'm going to point out the key daily levels. First is the put wall at 4,200. That's the strike with the largest net negative gamma that can be expected to act as support. So that's the potential floor. The next level up is 4,300. That is the absolute gamma strike. That's a strike with the largest absolute negative and positive gamma. Above that is the volatility trigger at 4350. That is Spotgamma's proprietary gamma flip level. Below that level, market makers' position on the gamma curve is negative. In a negative gamma environment, market makers have to trade with price to hedge their delta exposure, and that tends to increase or enhance volatility. And above that level, market makers' position on the gamma curve is positive. In a positive gamma environment, market makers have to trade against price to hedge their delta exposure, and that tends to decrease or subdue volatility. And then finally, the call wall is at 4450. That's a strike with the largest net positive gamma, and that can be expected to act as resistance. So the call wall, the potential ceiling, and the put wall, the potential floor. And note the call wall did shift lower from last Friday at 4,500 down to 4,450 today. So that's not really in play, but overall slightly bearish that call wall would shift lower. All right, so those are the levels in play for SPX, or the key daily levels. Let's take a look at a one-day chart to see the levels that are in play for today. So this is SPX in a one-day, 1-minute chart. And note here, the key takeaway from this chart is the 4,300 level and that combo L2 level just above that combines SPX and SPY gamma into one level did act as resistance today. We'll just scroll in a little bit here and see that SPX is trading within the upper and lower daily expected range, but closer to the lower daily expected move. And also SPX is well below the volatility trigger for today, shown here at 43.50. All right, so those are the SPX levels in play for today. Let's take a look at Bookmap now. In Bookmap, I have my own cloud nodes, and I'm showing SPX levels. There's that 4300 absolute gamma strike resistance level that did act as resistance. I also have SPY levels on this chart. Here's the SPY 425 put wall, absolute gamma strike. That level, around that level, acted as support so far today. Also this 42.75 level and the SPY 426 level has been a key level today, acting as support and then resistance. So we'll keep an eye on the S&P 500, see what it does at that level again. Again, 426, 42.75, acting as support and then resistance. I'm going to darken up the heat map, and you can see the liquidity at these levels. The heat map is showing a history of the resting liquidity limit orders, and notice they're lined up exactly with that level. All right, note there is a difference between the price of ES and SPX. Right now it is actually around 36, and I set it earlier today at 35, so it has changed a little bit during the day, trading now at 36. So that 42.75 level would be up at just a little higher, 43.11. All right, so those are the levels in play for the S&P 500 today. I talked about shifts in levels for SPX. The call wall shifted lower. For SPY, the volatility trigger shifted slightly higher, 1 point. And the call wall also shifted lower from 460 to 450. And then the absolute gamma strike shifted lower to 425. And that's shown right here, just above the ES 4300 level. So overall, especially considering the shift lower in the absolute gamma strike and call wall for SPY, slightly bearish based on the shifts lower in the levels. Traders are looking for and accepting lower prices by shifting their open interest to these lower levels. And hello, Derek. Glad you're here. Afternoon here. Welcome. All right, so that's the S&P 500. Shifts lower in levels, call walls for both SPX and SPY, absolute gamma strike for SPY. All right, let's take a look at NASDAQ. So this is the NQ futures in Bookmap. Looks like I didn't get everything loaded here. Start up my price lines. All right, so while we're waiting on that, so it looks like the upper daily expected move acting as resistance, and we'll take a closer look at that in just a moment. So let's take a look first of all at QQQ for the day, and note the 360 level right in the middle of the price range. That is the volatility trigger and also the absolute gamma strike. So kind of a key level for QQQ there. And we'll go back to NQ in just a moment. And most likely a good bit of the volume today will be clustered right around that level. So those are the 360 and the combo level. Just below that, I believe, are the only Spotgamma levels in play for today. for QQQ. Or let's take a look at NDX. And there's that combo level, combining NDX and QQQ open interest into one level. All right, so it looks like the volume is actually clustered above and below that 360 level. All right, so this is NQ. Key level for today, resistance at the upper daily expected move. Again, I have Mount Cloud notes. I'm showing QQQ levels. There's the 360 level. Note also the NDX level. This 0 gamma level did act as support this morning. And for some reason that was not shown on the Thinkorswim NDX chart that we just took a look at. Most likely because that support actually occurred before the cash open when NDX starts trading. All right, so those are the levels for NASDAQ. For shifts in levels, for NDX, the volatility trigger shifted lower, put wall shifted higher to 14,000, and then for QQQ, the volatility trigger shifted lower. So minor shifts in levels for the NASDAQ. All right, let's take a look at gamma notional now. We'll see how market makers were positioned on the gamma curve at the beginning of the day. Oops. This is gamma notional for SPX, SPY, NDX, and QQQ. I normally don't look at NDX. It's not significant compared to the other numbers. For example, SPY is at 2.345 billion and NDX at 626K. All right, so these numbers for SPX, SPY, and QQQ are negative, quite negative. And the changes were mixed. So for SPX, gamma notional became slightly less negative than Friday, and for SPY, gamma notional became more negative. And again, both quite negative, especially SPY at over minus 2.345 billion. Also for QQQ, that number did shift lower from Friday. So also for negative, so negative for all the indices there. All right, let's take a look at the Vanna model now and get a graphical representation of what that means and why we take a look at that. All right, so I'm going to start with the Vanna model for SPX. And let me explain this chart. This chart is showing market makers delta notional. This is market makers delta exposure. And this is showing how they change, how delta notional changes with changes in price. That is shown by this gray curve here. Remember, options market makers want to remain delta neutral. Their job is to make markets and manage their risk. So they want to remain delta neutral. So we assume they are delta neutral at the beginning of the day, and then this Vanna model shows how they may have to hedge as price and implied volatility changes. That's shown by the purple curve. So the purple curve adds implied volatility to the equation, again showing how market makers delta notional changes with changes in price and implied volatility. So what this is showing is if price and price increases, implied volatility drops, market makers can buy back short futures. So when traders buy and sell options, SPX and SPY, market makers hedge those trades with ES futures. So they take the opposite side of the trades and then they'll hedge their delta exposure with ES futures. They always want to remain delta neutral. So as price increases, implied volatility drops, market makers can buy back short hedges. On the other hand, if price decreases and implied volatility increases, market makers they'll have to sell futures to hedge their delta exposure. Remember, they always want to remain delta neutral. All right, SK Gengo asks, what is the importance of delta, gamma, and Vanna notional levels? So I'm talking about that right now. And this is primarily to understand how market makers may react to changes in price and applied volatility and how they have to hedge if they're trading with price or against price. And in this negative gamma environment, they're trading with price. So I'm looking for larger moves, higher volatility, setting my price targets further away. Again, looking for wider trading ranges in a negative gamma environment. All right, let's see where SPX is trading right now. SPX is around 42.72. So that looks like that's a new low of the day. So right around here. So this is showing if price continues to decrease, price moves down, price is on the horizontal axis. Following this curve, market makers, let me redraw that. Market makers' delta notional is increasing. They want to remain delta neutral, so they have to sell futures to hedge their delta exposure. So price is decreasing, implied volatility increasing, their delta notional is increasing, and they have to sell futures to hedge their delta exposure. All right, so SK Gingo, hope that helps. Hope that explains this. So I'm looking at this again to get a sense of the volatility and trading range for the day. And I know in a negative gamma environment, market makers are trading with price. That means that traders are long puts, market makers are short puts. And as price drops, those puts are gaining delta. They want to remain delta neutral, so they have to sell futures to hedge their delta exposure. All right, let's take a look at SPY. Very similar, and by the way, this curve is very typical of a very negative gamma environment. Here's gamma notional, here's the Vanna model for SPY. SPY is trading between 425 and 426. There's 425 right there. Again, remember that's the put wall. And SPY did test that level earlier today. So again, price decreases, implied volatility increases, market makers' delta notional increases, and they have to sell futures. On the other hand, if price increases, implied volatility drops, market makers' delta notional drops, and they can buy back short futures. And by the way, that change in delta with the change in applied volatility is the Vanna model, is the Vanna effect. Vanna is a second order Greek. All right, let's check QQQ now. And QQQ is trading right around 360. So not quite as much of a Vanna tailwind here if price increases, but again, this works both ways. If price decreases, market makers will have to sell futures. All right, let's take a look at some setups now. And by the way, my thesis for the day was bearish based on the shifts lower and levels for the S&P 500, and also looking for a higher volatility, wider trading range today. All right, let's take a look at the S&P 500 first. This chart is the hero chart, hedging impact real-time options. This is available to Spotgamma subscribers. What this chart is showing is price and the hero signal. Price in the white line for SPX. Purple is the hero signal. Again, hedging impact real-time options. This is showing options trades and market maker hedging activity for a combined signal for SPX, SPY, XSP, and ES futures. So if you trade any form of the S&P 500, this is the signal that you want to take a look at. All right, let's zoom in on this. So this is, let me zoom out just a little bit, starting at the cash open here, 9:30 a.m. Eastern Time. Pretty choppy up until about 11:30. And there was a great divergent short setup here. This is what I want to highlight. So I'm going to zoom in on that. And note that this is showing the key gamma strike, which is the same as the absolute gamma strike for SPX at 4,300. Generally, hero was rising. Oops, wrong tool. He was rising. Traders were taking positive delta positions up until that point, and then as price hit that 4,300 level, they immediately started taking negative delta positions. Hero continues to drop. They continue to take negative delta positions, and price falls. When traders take negative delta positions, market makers are taking the opposite side of that, positive delta positions, and they have to sell futures to hedge their delta exposure. All right, let's go take a look at Bookmap. Let's go back to ES. I'm going to zoom in here. So remember, let's just go back to hero real quick. So right around 11:21, 11:22, traders immediately started taking negative delta positions. Tone this down just a little bit, make the volume dots a little bit smaller. So that's right around here. As price hit that 4,300 level. And there was, I looked at this earlier today, there was a stop run up to that level, buy stop orders, helping to fuel the move higher. But Bookmap is showing that aggressive buyers also were moving price higher. That's shown by the green volume dots. The volume dots are showing market buy minus sell orders. That's a delta, with a green dot indicates there are more buyers than sellers. So options traders were starting to fade this move. Then aggressive sellers start coming in. Market sell orders shown by the magenta volume dots. You can see the shift in cumulative volume delta below here. That's shown by the dark blue line in the subchart. Cumulative volume delta shifts, and you can very clearly see the shift in order flow. Options traders taking negative delta positions. This is a potential resistance level at 4,300, and aggressive sellers start coming in at that level. This was a very easy read, clear read for a short at that potential resistance level. Again, this 4,300 level noted as resistance in the Spotgamma AM Founders Note. And price moves lower down to the SPY 425 put wall. Right there. Did trade a little bit lower. All right, so that's the trade that I wanted to highlight in the S&P 500. Took some patience to wait for it. There are also a few other setups. Reversal here at SPY 428, but this was the best setup there. 2 hours after the cash open, just waiting patiently for a reaction at that 4,300 level. All right, let's take a look at NASDAQ now. So NASDAQ, let's go to Hero, see what options traders were doing. We'll get back to the S&P 500 in a few minutes and see, slice and dice this a little bit more and see exactly what options traders are doing. So let's go to NASDAQ. I'm going to take a look at this combined signal for NDX and QQQ. Zoom in. All right, so if you like to trade the open, this was a pretty clear signal. Options traders taking positive delta positions from the open, setting up a long, again from the cash open. Let's go take a look at Bookmap. Going to zoom in. Here's the cash open. Just above the QQQ 358 level that's shown by the yellow line, also the NQ 14850 level. Aggressive buyers shown by the green volume dots. So price moves up about 100 points to 950, consolidates, then takes off again up to the upper daily expected move where it reverses lower. All right, so if you were patient, held a runner, you got it all the way up to the upper daily expected move just below the 1550 level. All right, let's scroll. Oops. Scroll to the right a bit, then we'll look at this short setup right around the same time as the S&P 500. Let's go back to the combined signal for NASDAQ. Zoom on this. So another divergence setup. As NASDAQ was making its way up to that upper daily expected move, options traders started taking negative delta positions. Price consolidated for a couple of minutes and then moved lower, again at the upper daily expected move. Let's go back to Bookmap. Very similar to the S&P 500. Aggressive buyers on the way up. This pink line is showing cumulative volume delta, and I have my cumulative volume delta set, the color set, so that when this cumulative volume delta is negative, the line is pink. When it's positive, it's dark blue. So it's still rising, showing by the rising line in the subchart. It levels off, then moves lower. So the aggressive buyers step away, aggressive sellers start to come in, and then they take price much lower. As options traders were taking negative delta positions. And again, when traders take negative delta positions, market makers are taking positive delta positions. They're just taking the other side of those trades. And for QQQ and NDX, they hedge their delta exposure with NQ futures. All right, so if you trade the open, there was the long setup, and then the short setup at the same time as the S&P 500. All right, let's take a look at some stocks now. Let's go back to Hero. Let's just check the alerts here, see if there's anything that we want to take a look at. Oh, here's QQQ. Let's see what QQQ is trading down. All right, so this is interesting. I'm looking at not the current flow alert, but this previous flow alert. This came in at 11:30, showing this reversal. There's the flow alert as Hero started dropping, and then price was starting to respond. There's the flow alert. So there's an additional confirmation of that short setup that I just talked about. All right, let's take a look at some stocks now. And here's what I did earlier today. I ranked my watch list by this Hero signal. And again, remember, NASDAQ was bullish in the morning up to that upper daily expected move. I'm going to start with NVIDIA at the top of the list. So what I'm looking at here is the Hero signal. And this slider is showing the strength of the Hero signal compared to the last 5 days and last 30 days. So the entire length of this slider, and I'm sure it's impossible to see, but it ranges from right around here to here. That's the entire length of the slider. So this dot is showing, comparing the current Hero signal for today with the last 30 days. So far to the right, that's the strongest that it has been in the last 30 days. Also, the colored portion is showing the strength of the Hero signal for the last 5 days. So this dot to the far right is as strong as it has been in the last 5 days and last 30 days. And that's for NVIDIA. So let's take a look at NVIDIA. Zoom in on this. Note, first of all, the 455 call wall key gamma strike. Key level. Let's see what traders are doing. So up until about 11:30, Options traders were buying calls, shown by the rising orange line, and selling puts, shown by the rising blue line. Orange shows calls, blue shows puts. The slope of the line, the direction, is an indication of delta, positive delta for a rising line, negative delta for falling line. So they were buying calls and selling puts. Go back to the combined signal. And note how the traders, options traders, take their foot off the gas as NVIDIA hits that 450 call wall key gamma strike and price starts to move lower. So great uptrend up to the 450 call wall level. Options traders take their foot off the gas and then price starts to move lower. Let's go take a look at Bookmap. Go to NVIDIA. All right, Truman asked, does the flow alert go off when the stock price starts to respond to Hero? So the flow alerts are new, and I don't know the algorithm behind that. Brent has talked about some. They were just released last week, I believe. So I don't know. They just indicate unusual Hero activity, and I have not looked at them long enough to really base any decision, trading decision, other than something to get my attention. So no, I think it just indicates unusual Hero activity. All right, so here's NVIDIA. Here's the 450 call wall key gamma strike. And notice the sharp move higher this morning. A couple of pullbacks for entries as price moves up to the 450 level, reverses, and then moves up to 451 before options traders at 11:30 take their foot off the gas. They stop buying calls, stop selling puts, and price moves lower. All right, so Truman, I've used Hero for quite a while, and I still rely mostly on my interpretation, my read of Hero, and look at the alert as something that would get my attention. Another pair of eyes looking at Hero, something to get my attention. All right, so that's NVIDIA. Let's go back to Hero. Nice long setup in NVIDIA. Let's take a look at Microsoft. This one's not as clear. Looks like a long setup right here around 1045 up to and above the 320 key gamma strike. Let's go take a look in Bookmap. Remember, I'm going by Hero signal here. That's my criteria for going through these stocks. All right, so here's the cash open. There's the opening print, that big green dot. And the long setup was right around 1045 when traders started taking positive delta positions, and price moves up to the 321 level. And 320 again is the key gamma strike, I believe. Let's go take a look at that again. Yeah, 320 key gamma strike. Notice price starts to move lower as traders take their options traders stop buying and start selling, started taking negative delta positions. All right, the next on the list, Google. Here, let's see what traders are doing in Google. So mainly buying calls. Aggressive call buyers from the open. Price moves higher. Oops, not sure what caused that. Actually, let's go back. Go to the total signal. Zoom back out. Sorry about that. So in the case of Google, all right, I got a message from OBS Studio. This is something that I use to stream to YouTube. So can someone on YouTube please confirm that you can hear me and see my screen? All right, Truman says yes. Okay, I'm not sure what happened there. All right, so anyway, in the morning, traders were taking positive delta positions, and Google responded, moving higher. When traders buy calls, market makers sell the calls, and they have to buy stock to hedge their delta exposure. All right, Truman, thank you. Max, thank you. Mark, thank you. And Don, thank you as well. Thanks for the confirmation. All right, there's Google. Let's take a look at Netflix. Netflix traders were buying calls, shown by the rising orange line. Also net selling puts for the day. This notional value for the blue line is positive well. So when traders buy calls and sell puts, market makers take the opposite side and they have to buy stock to hedge their delta exposure. And again, just like we've seen over and over again, when options traders take their foot off the gas, whoops, wrong tool. When options traders take the foot off the gas, price starts dropping or consolidates. All right, let me check for questions. All right, slow down. Hello. Ask me if I can recommend an easy way to convert SPY QQQ to ESNQ if we don't have Thinkorswim to use the script. Your first choice would be to whatever trading platform you use, see if you can find a scripting language or some way to get that information automatically calculated. If not, what you can do is the manual way, and I used to do this. Let's go to so what you can do if you don't have any access to any trading platform or script, you can take a look at a chart like this. and at the same point. So just calculate or look at the value. So Thinkorswim is showing I'm looking at 1043, and this is, it may be hard to see, but it's up here. This is showing me the high and the low and the close for every minute on the chart. So you can go to 1043, for example, take the low. You could take the high at this point, and then compare that with an ES chart at the same points in time. So take the lows and the highs at several points, 3 or 4 points, compare that with ES, calculate an average, and there's your ratio. It takes more time, but that's a way to do it. All right, so that's actually the way I used to do this. All right, Slotazari has mentioned Tesla a couple times, so let's take a look at Tesla. So by the way, NVIDIA was in the news. I think Goldman Sachs added NVIDIA to the conviction buy list, and that's enough to cause a buying frenzy in calls for NVIDIA. Let's take a look at Tesla. All right, Tesla reported vehicle deliveries over the weekend. Slotazari has provided details in Discord. Let's just take a look and see what traders were doing. So very bullish reaction from the open. Let's take a look at Hero, see what options traders are doing. We'll go to Tesla. And let's separate out, let's zoom in on the morning session a little bit. So the uptrend in the Hero signal. So options traders were taking positive delta positions. Note the hedge wall at 245 and the key gamma strike at 250. So price traded below the hedge wall and then traded above the key gamma strike. We'll see what traders are doing. So they're selling puts and buying calls. That's shown by the rising blue line for puts, rising orange line for calls. Let's go take a look at Bookmap. Nice uptrend there. Pullback entries. As traders continue to take positive delta positions, market makers take the opposite side and they have to buy stock to hedge their delta exposure. Multiple pullbacks to that trend line, headed toward the 255 liquidity level. That is showing a history of limit orders in the order book. That high liquidity tends to act as a magnet for price. Zoom back out. So price made it up to 254 right around 11:30 when everything else started to reverse. And let's take a look and see what options traders were doing then. So again at 11:30, options traders take their foot off the gas. Price consolidates. Instead of moving lower like some other stocks. Let's go back to Bookmap. All right, so Tesla did move lower a bit, consolidating now just below the 250 key gamma strike. Let's go back to Hero. And traders continue to take negative delta positions. So I would not be looking for a long entry in Tesla. All right, let's go take a look at indices now. Go back to the S&P 500. So overall net for the day, traders are taking negative delta positions. This number is pretty small, minus 220 million. Let's see what traders are doing. This is pretty typical. They're buying calls, shown by the rising orange line, the positive notional value. Positive notional value, they're buying calls. They're also buying puts. Very typical for an index product. Calls and puts moving in opposite directions. And overall, the put buyers are slightly more aggressive. And let's go. Let's take a look at 0 DTE trades. I'm going to turn off all trades. So the green line is showing what options traders that are trading 0 DTE, options that expire today, showing what they're doing. The purple line is showing all expirations. So let's turn off. Looks like the 0 DTE traders are having a very large influence on price today. So we can confirm that when we just look at 0 DTE. We isolate and we can see the very strong correlation between 0 DTE traders, options trades, market maker hedging activity, and price action. So now we've kind of zoomed in and isolated a key driver price action today, and that is the 0 DTE traders. And note the short setup that I talked about earlier today at 11:30 is very clear, with the 0 DTE traders taking negative delta positions at this key gamma strike, and price reversed lower just a few minutes later. All right, so again, 0 DTE traders in the S&P 500 helping to drive price lower for the day. This number, net notional value, is negative for the day. And if we want to be extremely precise, we can separate out this into puts and calls. So the rising green line is showing call buyers. That's positive notional value. And the falling light purple line is showing traders selling puts, or buying puts, shown by the negative notional value. So they're buying calls and buying puts, and the put buyers are more aggressive. All right, let's clean this up. Go back to all trades. Not sure why it did that again. All right, let's go take a look at Bookmap. Take one last look at the S&P 500. Alright, so it looks like the S&P 500 is back down to the 425 SPY 425 absolute gamma strike put wall, as 0 DTE traders are buying puts. And if price breaks below that level, looks like the next level is the lower daily expected move. Let's just zoom in on this just a little bit. And you can see the shift in order flow here as price reversed. Aggressive sellers start to come in. Looks like a stop run. Buy stop run up to or right around point of control. That's shown by this purple line. And then price moves lower down to the 425 put wall, absolute gamma strike level. Now it looks like aggressive buyers are coming in at that level. We'll take one last look at Hero, see what options traders are doing. I'm just going to leave it on the total signal, so it looks like all expirations, so it looks like they are starting to take positive delta positions. All right, my time is up. I want to thank everyone for watching. Thank you for your questions and comments. And I will see you tomorrow. Thanks again. Bye.